Good morning. You're watching The Market right here on ET Now. Let's quickly walk you through what happened with the global markets and then, of course, we'll come to our markets. Overnight, US indices have managed to clock a 15-month high. You had some of the key banking results as well, which managed to only lift off US equities. So we've got a decent handover, at least coming in from US markets, about a 1% move coming in for the Dow, the S&P 500 index, with a gain of about 0.7%. And the tech-heavy Nasdaq as well managed to hold out by about 100 odd points. Of course, China's growth commentary as well has managed to spur the other asset class, which is crude as well. So just quickly walk you through what oil markets have been up to. Well, overnight, they've seen a bit of a dip coming in, but Brent, for all practical purposes, is hovering around that $80 per barrel mark. So that's really pretty much the global context that we are stepping into trade with. For our markets, yes, we eased off from the top of the day towards the dying minutes of trade yesterday, but we are only about around 200 points away from 20,000.
Yeah, I mean, that's one way of looking at the market, but I would insist that that is not the only way of looking at the market. Sure. And I'll try and set the context here for our viewers here. I think there's a stark difference in the way how US markets have moved in last couple of days versus how Indian markets have moved last couple of days. Let's look at the S&P. And S&P and Dow, they both have hit a new high, new 15-month high, not a fresh high, but a new 15-month high. So the US market, when it started rallying, the rally was concentrated in and around large tech stocks. You had Nvidia, you had Microsoft, you had to some extent Apple. They were the ones who were leading the market. It was a very narrow rise for the US market. Guess what? That is changing. S&P is up and Dow is also catching up. In India, there seems to be a very different kind of pattern which is at play, which is that look at the small cap index, even yesterday's move. Let's look at the Nifty intraday graph and the small cap index. I just want to make this very small point here. That's the Nifty intraday graph for you. And that's the small cap index for you. Hello. The small cap index yesterday was down and Nifty was in the green. Why that is happening? Well, thank you Reliance, thank you Infosys, and thank you to the flows. So flows are getting concentrated. They are moving into select large cap stocks, but the broader market, in a sense, what we've been discussing and indicating, is very different. Unlike US market, where the broader market has started participating, apart from Nasdaq, new stocks are moving higher. In India, Reliance, Infosys. So, it's a very, very different mirror image of what India is versus what US market is. In that context, yes, ladies, we can say we are 200 points away from 20,000. The ring of that is very magical. But the reality of the market is that it's getting slightly choosy. Yeah. Don't go crazy in small cap stocks. Be lazy in large cap stocks and be choosy in mid cap stocks.
Yeah, and it really played out to that script, Nikunj, yesterday, that the fact that, the broader markets didn't quite play catch up, the frontline index did manage to hold out. It was those large cap stocks that clearly led the way. PSBs were the top laggards, and you do have a number of Nifty stocks as well that were at 52-week highs. So that's really where all your strength came from. Apollo Hospitals, ICICI Bank, Bajaj Auto, Reliance Industries. Those were the ones that really guided the market. So Nikunj, in light of this and what you're talking about, this stark difference with the way we're moving with the US markets, etc., do you think that the strategy now is perhaps to stick only to those large cap stocks? And more importantly, do you think this divergent move between frontliners and mid caps will continue?
So just for the benefit of our viewers who are watching us here, what can they do? If you are with large cap stocks, you just want to wait this week out before you make an opinion. Because you have Infosys numbers and you have Reliance numbers. And if we come on the right side of both these events, Nifty definitely will go above 20,000. So you do not want to sell your large cap stocks. If you are in mid cap stocks, I think only sliver of the mid cap stocks now offer value. And again, they will come with underlying volatility. So you got to fasten your seat belts there. Get choosy, or you got to fasten your seat belts there. I mean, that is how it is. You fasten your seatbelt not because you are expecting a turbulence, but you fasten your seatbelts because that's for safety. But in small cap stocks, I think you should not commit. You should not commit capital. You should not initiate a new buy. Please avoid a tip in a lift if you are planning to buy into small and mid cap stocks, because the small and the mid cap stocks now reaching what could be called as a dangerous territory where margin of safety is not there. I'll insist, large cap stocks, wait for this week. You'll come on Reliance and Infosys numbers. Fasten your seat belts in mid cap stocks. Very few mid cap stocks will give you this kind of a return. And in small and mid cap stocks, ideally you should book some profits. Yes, you must book some profits, but don't initiate new buy. I mean, I think that tip in the lift, kya lene ka kya lagta hai, in the small cap space, I think that's getting over now. You'll get a chance to buy it again, but my limited point is maybe this is not the time.
Be a little cautious.
Yeah.
Don't give in to the exuberance. Okay, demerger. This is going to be an important one for Reliance Industries. Remember, today is the last day to be eligible for Jio Financial Services shares. So in case you want to buy Reliance and get Jio Financial Services shares, that last date is approaching. It's going to be a share swap. So yes, you're eligible for today. But this will also lead to a lot of adjustment, right? I mean, for instance, in the interim, we'll have 51 stocks in the Nifty. I don't know if that's happened ever.
No, it's happened once in the past when you had Tata Motors, that adjustment with Tata Motor and Tata Motor DVR. Okay. So it has actually happened in the past. So let's first understand, I mean, this is something very unique, that Reliance is giving birth to a new business, and it's a brand new business. Historically, Reliance has always ring-fenced their main balance sheet to create small companies. For example, Reliance Petroleum, RPL, which was created, it went public, and then it was merged back. This time around, you're getting a free share. When a free share, or when you're giving birth to a free share, and since that free share will come to the existing shareholders, the price discovery has to happen. And because the price discovery has to happen, there's a special session tomorrow. So what the price of Reliance is, tomorrow the real price of the business would be discovered, and that in a sense becomes the price of the Jio Financial Services. Now this is going to be a very interesting business, considering that Reliance, they understand scale, they understand size, they understand technology. They now have perhaps the biggest Kahoot in terms of in data network. So this is going to be a disruptive business. And considering that it is coming from the house of Reliance, institutional investors, retail investors, HNI investors, everybody would like to own it. So the move in the Reliance, I think, is largely because everybody wants to buy the stock. Everybody wants to own the stock, whether it's institutional investor, non-institutional investor. That explains that why Reliance has seen a run up. What happens today? I think there's a technical level at play, which is that Reliance F&O expiry will be at play. You'll have to roll over your positions. And we'll understand from Kunal that rollover happens today or tomorrow. I mean, I'll have to technically figure it out. So this would be a space where, Aisha, I think funds now can see, institutional investors can see that the combined value of Reliance and Jio Financials, when the price discovery will happen tomorrow, suddenly could give you this 5% additional bonus. And that really creates this kind of an excitement. Now, you write on the Nifty part that because the additional stock comes out, if you take the value out of the Nifty automatically collapses. So Jio Financial Services will be part of the Nifty at least for some time. It may not be permanent.
Okay, that's important to track as well. And it's interesting, looking at the kind of potential benefits that it could get a AAA rating similar to its parent Reliance Industries, very large distribution footprint, as well as the kind of valuation picture. The book value could be around 200, and you've got some of the brokerages assigning a value of 189 to 179 thereabouts. All right, let's talk about our own markets and important levels to track with our chartists. We've got Nooresh, Merani and Kunal Bothra as always joining in. And Kunal, it's interesting because we're talking about that stark difference, as Nikunj was saying, between the mid-caps and what's happening with the frontliners. The fact that the move yesterday was purely led by marquee names like Reliance Industries and Infi. What's that indicative of?
Good morning, Avan. So yes, it's a phase of the market where large caps are trying to get their mojo back, as well as get back into the line of outperformance as compared to mid caps. We've seen a whole host of large cap names participate on a consistent basis over the last 1 week or so, beleaguered or underperforming stocks like the IT majors, Infi, TCS, HCL Tech, etc. These stocks have made a very good comeback. There has been a slew of short covering in that pocket. Reliance has made a very good comeback. HDFC Bank also has made a good comeback in the last 3 or 4 days. So on the back of it, the strength is getting reflected as well as replicated on the Nifty 50. But I think one of the other important aspect is on intraday basis, that in this kind of a market where you see the index moving up higher, but then there are those odd corrections which come in between on an intraday basis. In that kind of a scenario, I would believe that slight change in strategy has to be tweaked, because in terms of buying momentum, because if the index opens with a gap up opening, we tend to look out for more breakout trades. But I think in this kind of a scenario, it's always better to try and find stocks which are either on the verge of a breakout, slightly below the breakout levels, or closer to the support point. So that's the only tweak which is required for the index strategy.
Okay, and Nooresh wanted to understand, you think some more consolidation on the cards, or you think we're going to make another dash to 19,800 plus?
The case has been we've been looking out for a consolidation, but we've just got a 3-day correction last time from 19,300, 19,600 band, and now we are back to a fresh move as well here. So the case is, till the time the trend is up, you continue to ride on to the move, focus less on the index and be stock specific. So at current levels of 19,700 plus, the risk reward is not there for a Nifty long, but stock specific still there could be opportunities across the board. But the bias is positive. The global markets are breaking out. So the two things which have happened is we are seeing a breakout in Dow Jones. We are seeing a breakdown in dollar index continue below the 100 mark. So a lot of risk on environment is there globally. And in that case, it would be tough for us to see a correction in a sharper way. So we could consolidate. The only case is now the base shifts higher. We could be earlier looking at 18,900 as a support. Now 19,300 becomes a support. And overall, the trend is up. And even if one of the 3-4 heavyweights which have not done well takes a lead, we could continue higher. So, and a lot of results are there over the next 10 days. That could make the real impact rather than just the momentum globally.
The heavyweights have now started participating, right? And you've been seeing some beaten down mid and small caps as well make a comeback in the last leg of the rally. Time to get cautious on small caps, and if so be the case, would your buy list this morning would be largely large caps?
So in specific pockets, yes, that there is some froth which is developing in the small cap names. There are a few stocks, where we've seen rallies of 30, 40, 50% in a very short span of time. So I think one has to try and adhere caution in that pocket. But then, if you ask me that whether it's a large strategy, I think we're still not getting that reflected or replicated on the major the Nifty 500 index, which you generally try and ascertain whether the index is overbought or not. So I think we've not yet seen that reflection in that index, as well as most of the components in that index. But yes, in specific pockets there is a sign of overheated price action. Now, in terms of individual stocks, I would focus on stocks which are either on the verge of a breakout or getting ready for a second round of uptrend. Bharat Forge is the first stock which I would suggest as a buy. Stock has been an underperformer, but I think on the recent charts, it's getting back into slight bit of momentum, coming closer to that 870, 875 mark, which is the breakout point for Bharat Forge. So, I would suggest a buy with 900 as a target, stop loss at 855. Now, Aurobindo Pharma is the second stock, which I think after a week of consolidation is back again closer to the breakout levels. We've seen pharma index over the last couple of days. In fact, the mid-cap pharma names have actually started to show some good price action, whether it's the likes of Glenmark, Zydus, etc. So I'm expecting Aurobindo Pharma to replicate the same, buy with a target of 780, stop loss at 740.
Okay, now the deal which I want to bring up, and it is Rallis India. Rekha Jhunjhunwala has sold 1 crore shares in Rallis India, and it has been picked up by Tata Chemicals. Let's look at a context here. Of course, Rallis has been one of the oldest investments of late Rakesh Jhunjhunwala. He kept the faith. There was a time when his ownership in Rallis was almost in double digit. But Rallis, if you frankly ask me, is one of those Tata companies which has disappointed. They continue to disappoint, and they've disappointed. The last quarter numbers were also not that great. Rallis is a Tata group of company. It is a subsidiary of Tata Chemicals. But frankly, if you ask me in terms of what their capability and what their ability is, this has been a ranked underperformer. Now, when you say Rekha Jhunjhunwala is sold, it clearly means that the investment committee, or RARE in this case, the investment committee which was been nominated to take care of Rakesh Jhunjhunwala's investments, they have taken a decision to sell Rallis. But the broader question you could ask yourself is that, why is Rallis underperforming? I mean, very few Tata group of companies have not really managed to come back despite the efforts. And this is one of those old classic investments where even the great Rakesh Jhunwala in a sense kept the faith but never saw it.
Yeah.
His ownership, I think, in Rallis was peak of 10%, which subsequently has come down and it is now sub 5% now. And no, that's not the one you want to look at. You want to look at actually yesterday's block deal, because these are incremental changes, they don't matter. The fact that his ownership when Rallis has come down, and this is June's data, the block deal has happened after that, that just tells you that incrementally they've decided to,
And
sell.
also quite a steep drop, right? From the earlier 7.75% stake that they held, it's now brought down to 2.25%.
Yeah, it was peak 10 plus is what I remember. Subsequently, they have delivered. The point I want to bring out here is that Rallis has been one of those laggards. Every group has a laggard, and this unfortunately is the laggard for the group.
Okay, that's Rallis in trade for you. Let's see how it actually kickstarts in trade today. Typically when you have marquee investors exiting any stock, there's bound to be sentimental rub-off. Although Rallis doesn't have much of volume traded on a daily basis on the stock in any case. Having said that, let's take it across to Nooresh as well. Find out what are the stocks that he's betting on. Nooresh, what's your list looking like this morning?
So focusing on autos being a little more defensive here. First is a buy on Hero MotoCorp. The stock has given a multi-year breakout coming out of an 8 to 9 year consolidation with hardly any returns. 2950 to 3000 mark conquered, went up to 3200 levels, did a retest closer to 3050, 3070. Getting into a tighter range, should see a breakout about 3150 levels. So preempting a buy here, holding on to momentum even in weak markets yesterday. So relative strength is starting to show up for the stock. Expecting it to move towards 3400 plus in the short term, stop loss at 3050. Second is a buy on Bosch Limited, another stock from the auto segment which has gone sideways, consolidated for the last few months. And over the last few days, it has tried to make that attempt to break out above the 19,600 to 19,800 mark. Yesterday also the stock came very close to it and again pulled back a bit. So a good entry point today. This would also be a 2-year breakout for the stock. Expecting this breakout to play out towards 21,000 to 24,000 in the short to medium term. Stop loss to be kept at 18,800.
Okay, let's also talk about some of the other stocks which are going to be in focus this morning. You've got Federal Bank and IndusInd Bank, Anisha.
Well, yes, IndusInd Bank reported another great set of numbers, nothing much to complain. When others are reporting a decline in the net interest margins, they've managed to hold it steady. And whatever was the problem of last year with respect to a bit of a concern happening, with respect to retail deposit and the CASA, that has been completely, managed by the company this time around, because the savings deposit jumped up by 6% on a quarter-on-quarter basis. The retail LCR deposits were up 5%. And even if you look at the NII growth, very strong at 4% sequential growth. No surprise then that we have seen target price upgrades coming in across the board. Morgan Stanley has now upgraded it all the way to 1800 versus 1725 earlier. Goldman Sachs has maintained a buy. Target price now stands at 1681, and ditto can be said for JP Morgan. However, they are still a bit tentative. They're maintaining a neutral with a target price at just around 1250. But Nikunj, we've seen that the stock has done quite well of late. It's higher by 13% versus, of course, the other larger private banks which haven't done much. Would you go the JP Morgan way, staying neutral and saying that, the upside is limited, or all the way to 1800, what Morgan Stanley is suggesting?
Anisha, there was a time when IndusInd Bank used to trade at a price to book which was equivalent to HDFC Bank. Yes, ma'am. It was in 2015 and 16. Then came the IL&FS crisis. And post the IL&FS crisis, they had to bring their balance sheet and they had to contract the balance sheet. Whatever they kept on communicating to the market, they were not able to deliver. And then markets, they lost faith. So if you look at IndusInd Bank and you just take out the last 1 month or last 6 weeks of outperformance, it really has been a true laggard because markets had lost faith. But last 3 quarters, they have started delivering. The book is coming, at the right space. Their growth now, their balance sheet is much smaller than HDFC Bank, is now picking up, and they've really managed to get their act together. The question you got to ask yourself is that IndusInd Bank is still a pure play bank, and HDFC Bank now, its new avatar, has all the other incubated businesses. ICICI Bank has got all the other businesses. State Bank of India has all the other businesses. Axis Bank has given birth to a credit card business, and they have now the insurance business. So IndusInd Bank is a pure play private bank, a new age bank, which is a pure bank. Do you want to bet on it? B, we know that Hindujas are looking at increasing their stake. what happens for that? Will that be a capital infusion? Or could that be from the capital market? Could that be from the open market? So I think that clarity is there. But I get a sense that the worst is behind IndusInd Bank purely based on the delivery and the valuations. But the challenge for IndusInd Bank time and again would be that at a time when if you're betting on a bank, do you really want to bet on a bank which is solo, or you want to bet on a franchise which has insurance, which has mutual funds, which has insurance, and which also has a large, credit card
Conglomerate
business.
of sorts,
Exactly.
yeah.
But still, I mean, keeping that point aside with respect to diversification, if you had to take a bet between, let's say, whether IDFC First Bank will perform better, of course it's a smaller bank, but nonetheless, or even a Kotak Mahindra Bank, because just purely for the fact that the stock has done nothing. What do you think?
Kotak Mahindra Bank was trading at a price to book of 6 times. It's a great franchise. And typically stocks, they tend to underperform when there is a change of guard. Look, it is Uday Kotak who's created this franchise value. Now we may argue and say that, okay, there is going to be a succession plan and there is going to be an internal candidate, not an external candidate. Markets would ask that what happens to Kotak Mahindra Bank if there is a change of leadership? Because Uday Kotak in his wisdom has been deeply involved in the important decisions which have been taken in terms of Kotak Mahindra's book and the lending practices they followed. That I think in a sense has also made market worried. So time-wise correction, they're trying to build their liability franchise. Kotak again has been slow in lending because Mr. Kotak has been vocal about not taking the franchise. He's been vocal about how he was not very comfortable when the economy was recovering. So that also explains that why Kotak in a sense now really needs to bring their lending up to speed with what other banks have done. See, Kotak has been very cautious and said since they were very cautious, they did not lend aggressively, and that costed them in 2022.
The growth stalled when others were growing in double digits, healthily mid-teen. That's fair. But yes, at least on the asset quality front, there has never been a question when it comes to Kotak Mahindra Bank, though other banks have also been doing all right when it comes to asset quality. But since we're talking about banks, let's also talk about Federal Bank because there's incremental news flow there. The company, or rather the bank, is looking at issuing fresh equity shares, around 7.27 crore worth of shares, and the total would be around 9,580 crores. The preferential allotment will be coming into the IFC and their affiliates, and that entity will hold around 8.11% stake in Federal Bank post the issue, and 3.3% equity dilution as well will happen. But even Federal Bank is looking to issue further debt as well to spur their growth going forward. There was this entire IPO that FedFina was expected to come up shortly as well. So a lot of this restructuring, or whether I should say events actually happening at Federal Bank, Nikunj. Ahead of that, should somebody look at it positively, or should you just wait by for all of these things to happen, or do you think value unlocking is what is on the anvil now?
See, the equity valuation is coming at a time when the price to book is not very high. And typically, when you are raising capital, you are raising growth capital, and that will automatically take up the book value higher. See, growth for a bank like Federal Bank was never a challenge because of the base and the category they represent and the fact that they have a formidable presence, at least in South India. So growth was never a challenge for them. It was really about getting the book in order, and it was really understanding the risk. Now, this new capital infusion surely will give them a lever up and a leg up in terms of how much more they can lend. If they are raising growth capital, if they are looking at unlocking the valuations of some of the subsidiary, they are going back into the high growth and high valuation unlocking mode. And typically when a bank is in that kind of an mode, or any company is that kind of an mode where when you understand risk, you're going back growth, you're raising capital, and you're unlocking value of a subsidiary, which means that the shareholders actually in the medium term should benefit.
Okay, and given the recovery that we've seen in the stock price post its earnings, let's see whether that sustains or not. IndusInd Bank, you just heard Nikunj and Anisha's opinion on that. So let's quickly hear out what the management also had to say after its numbers.
We don't need capital. We are very well capitalized as of now. Do you think a bank which has 18.40 as capital adequacy ratio will need capital? Why would you need a capital? Well, accruals are enough and will continue to add to the capital. So please understand, our utilizations, our risk-weighted assets have gone down. So your utilization of capital has gone down as a consequence. If you see last quarter, we were at 17.6. We are already at 18.4 because of the risk-weighted assets going down. And we balance our portfolio in such a way that our risk-weighted assets of the portfolio continue to show a decline.
Hi there, welcome back. Still tuned into the market. We've got a healthy handover from Wall Street, bolstered by strong earnings, and the Dow has posted its 7th straight day of gains. But let's find out back home what exactly the street will be watching out for. Lots of stocks that will be in the news, and a whole host of companies have come out with their earnings. Let's get in a quick wrap as to how the performance has been in Q1. Vinny's here to break it down for us. Vinny?
Absolutely. So some of the other stocks that are going to be in focus today on the back of earnings is going to be ICICI Lombard. First, when you look at it on the year-on-year basis, steady growth is what we saw coming in, tad bit ahead of the analysts and street estimates, but steady growth in the premium and underwriting profits is what one has witnessed. Now, profitability also is holding up despite the limited price hikes and industry discipline as well. Total income saw growth of 14%, profits saw growth of 12%, and solvency ratio at 2.53 versus 2.61%, 2.61 last year. So let's keep an eye out on ICICI Lombard. Himadri Specialty Chemicals, when you look at it in terms of the top line growth, yes, we're seeing a decline of 9%, but in terms of the operating performance, that has been quite strong for the company because margins have expanded by 725 basis points on a year-on-year basis. Profits seeing a growth of 123% on a year-on-year basis. Net profits have come in at 86 crores for the company as well. And obviously the EBITDA performance also has been strong. So yes, operating performance seems to be quite strong for Himadri Specialty Chemicals. Lastly, we have CIE Automotive, which is in focus as well. When you look at it, profit growth, that is up by almost 60%. Revenue seeing a growth of 4.7%, mild growth there. But operating performance, that has been strong as well. When you look at the consolidated EBITDA margins, that have seen around a 220 basis point expansion as well. So, you know, when you look at for CIE also, the operating and profitability front, that has been quite strong for the company versus just the revenue, which has just seen a 5% growth.
Okay, we leave it at that. IndusInd Bank, Federal Bank, and then of course Reliance. Given that today is the last day to buy Reliance shares in case you want a swap with the Jio services shares. So yes, these are a couple of stocks which are going to be in focus. Yesterday, the saving grace was Infosys, which lapped up about over 3.5% of a gain. Reliance Industries as well held out quite smartly, as did ICICI Bank. Kunal, is the strength in IT here to stay? And will we continue to see these sporadic moves as we did with Infosys yesterday?
Well, it seems like because there's been slew of short covering for the IT stocks, and you know the data is very, very interesting. 22 to 25% reduction in the open interest for stocks like HCL Tech. A very strong built up of open interest on the mid cap IT names, Coforge, Emphasis, etc. There's been consistent built up of open interest over there, and a gradual reduction of OI on the other large cap names like TCS and Infosys. So I think that generally blends in that the stocks in which traders were extremely bearish on, the likes of HCL Tech, which had actually seen a sharp crack pre-result. That stock has managed to bounce back on the back of short covering, and then the other large cap names like Infosys, TCS, Tech Mahindra, Wipro, these stocks have actually gone up in terms of higher delivery data as well as long built up. And of course, more long built up is also seen in the mid cap IT names. So three different textures for the IT stocks, and all three of them, they blend into a same opinion that the index should see a higher move on the upside. These stocks have given breakouts of 3 month to 5 month consolidation for themselves. So that also is a very strong indication that this trend is here to sustain, and this could be a start of a fresh, strong uptrend for these mid-cap IT names as well as the large-cap ones.
Okay, we just told you about how Reliance is going to be in focus. Today is the last day to buy Reliance Industries shares to get the demerged shares of Jio Financial. Now, for every 1 share of Reliance, shareholders will be getting 1 share of Jio Financial. Somit is here to help us understand how this entire process is going to work.
Well, given that the demerger date for Reliance Industries and Jio Financial is July 20th, the last date for any shareholder to buy the shares of Reliance Industries to participate in this demerger would be July 19th. Now, the ratio for this demerger is 1:1, which means that for every one share of Reliance Industries, the shareholders will get a new additional share of Jio Financial. Now, the listing date for Jio Financial is still not known. Now, what we know about Jio Financial is that the chairman and the CEO of this company are both ex-ICICI Bank leaders. It's KV Kamath, who will be the chairman of Jio Financial, and Hitesh Sethia, who will be the CEO of Jio Financial. Now, what will Jio Financial do? It will provide lending services to consumers, merchants, and it will expand in other verticals as well, like insurance, broking, payments, and asset management. Now, it aims to build a large digital fintech platform for all Indians, and going ahead, they're also open to bring in strategic and financial partners in the company. Now, when it comes to the valuation part, Jio Financial will be owning around 6.1% stake in Reliance Industries, which is the treasury shares, and the value of this treasury shares stand at close to 1.1 lakh crore. Apart from this, the company would have a net worth of close to 28,000 crore rupees. So, based on these numbers, what we understand is the company's book value would be close to 200 rupees per share, and brokerages have assigned a value of around 168 to 190 rupees per share when it comes to Jio Financial. On the listed side, Jio Financial will be competing with Bajaj Finance, Paytm, PB Fintech, Angel Broking, IIFL Securities, and Paytm, as I just mentioned. And on listing, what we understand is that Jio Financial's market capitalization would be close to 1.4 lakh crore rupees, which means that the company would be the fourth largest financial institution listed in the Indian stock market. Now, how could Jio Financial benefit? Now, it is most likely to have a AAA rating similar to its parent company, that is Reliance Industries, and this AAA rating will help the company get the cost of funds on the lower side. Now, only 6 large NBFCs in India have a AAA rating, and Jio Financial would be one of them. Apart from this, given the fact that Reliance Industries retail arm has a very large distribution base, the company will benefit from that also, because Reliance Retail has more than 18,000 stores in India and nearly 78 crore footfall on an annual basis. Apart from this, the telecom business is also the largest in India of Reliance Industries, with around 43 crore telecom user base. Now, what would be the impact of this demerger on the indices and the FNO? Now, the FNO contracts of Reliance Industries would expire on July 19th. On Nifty and Sensex, if you see, Jio Financial would be a part of the index at a constant price. And how will this constant price be discovered? Well, the opening price of Reliance Industries on July 20th minus the closing price of Reliance Industries on July 19th, the difference amount will be the constant price. On MSCI, it would be a part of the standard index, and on FTSE, it would be a part of the index if the listing is happening 20 days post the demerger.
Okay, thanks very much, Amit, for giving us those details. Let's move on then to some top fundamental stock ideas. And we've got a word coming in from Dipan Mehta, and he's got a real estate stock on his radar.
Lots of choices in real estate, and you could really pick and choose. All of them are having a great moment at this point of time. The entire sector has livened up phenomenally. And depending upon your risk appetite, you could look at, if you are highly risk averse, then Godrej Properties, DLF, Macrotech, offer some comfort considering the size, the balance sheet quality, and the diversity of their projects. But there's a lot of value in companies like Shobha as well as Prestige, and this particularly new, project of theirs could be quite a big contributor to the revenues, considering that real estate prices in Bombay, especially at the premium level, are at record highs, sky high levels, I would say. So from that point of view, it opens up an opportunity for Prestige and provides them a foothold in the, I would say, the richest real estate market in India, that being Mumbai. So very positive on all real estate companies, but these are the 3 or 4 which we track, which I feel more comfortable about. But I'm sure there are many others as well, which should report very good numbers going ahead.
Okay, let's chat markets. And before that, let's just quickly bring up what the GIFT Nifty as well is indicating and whether we're in store for some more up move to come or not. And there you go, the GIFT Nifty just about very, very flat in trade. But you know what? That's only an indicator of how we're going to begin trade. Who knows what happens post that. Sanjeev Bhasin joins in on this show right now to talk about what he's making of the market right now. Sanjeev, hi, good morning. Good to have you on ET now as always. Sanjeev, just so many critics out there saying that, you know, we are reaching that frothy limit. There is some sign of exuberance in the market, at least in pockets. What is it that you're suggesting that the retail participants do? Book profits or continue to enjoy the ride?
Yeah, good morning, Aisha. Welcome to new highs, not only here, but on the Dow, on all the indices. So the same simple saying is you can't run with the hares and hunt with the hounds. Either you are long and in there or you keep doubting and waiting for corrections. Just to disclose, mutual funds are still sitting on cash and they are trying to time the market. NAVs have underperformed the Nifty miserably, and the FIs, arrogance and ignorance go hand in hand. So the money supply is so humongous because you're left out and a global rally is there. So take it back a few months back, and when you know we were there on New Year picks on the first of budget, and we told you that this is a buy and hold market. Now there can be short-term corrections which are obviously imminent when you've had a parabolic run, but enjoy the party as long as it is there. We'll see when it gets over.
So not getting over anytime soon at least. But Sanjeev, for those who have missed out on it still, and you know, one is seeing that we are seeing an across the board participation, right? Some of the blue chips, the large caps, of course, have been the first to move. Small and mid caps as well, holding at life highs. How is it that you put fresh money to work right now? Any stocks that you would recommend?
Yeah, so Aisha, as a disclosure, we'll give you these picks, but these are some of our client holding. We must take it with that disclosure. So the top of the line obviously would be that you be with the blue chips. Now, whether you are with some IT, last week I was on your Hindi show and I said HCL Tech, whatever the earnings will outperform along with Tech Mahindra. By the way, Tech Mahindra was my top pick, if you recall, around the new year and the budget time. Now, my top pick here is Titan. I've done a whole survey of what the new sales are doing, what the eyewear business, it's humongous. And I've been traveling city to city. Plus, you know, you have next month Rakhi. And nowadays Rakhi sees as much of deliverance on, because of our emotional touch, rather even as much as Diwali. So I think Titan, even though it's an expensive stock, must be in your portfolio. I don't rule out 3,500 coming on Titan by Diwali. Now, the others would be select stocks in cement. I think ACC and Ambuja have weathered all storms. They can't trade at a 1/3% discount on EV to EBITDA on Ultratech. So ACC, Ambuja, I'm very bullish, particularly ACC. Given the reach, given that it's one of the lowest cost producers, and given that Maharashtra is going to see a huge humongous, spending by the government. At 1,800, ACC must be in your portfolio for a target of 2,200. Same with Ambuja, 470, 475 is on the card. The fourth name is a small mid cap called ABFRL. And you are aware of the brands and the spending pattern. Louis Philippe, Van Heusen, Alan Solly, you name it. Plus the Pantaloon chain and the youth outlook, you know, that is that American Eagle and all those brands are playing out brilliantly. This stock has corrected from 350, which it hit at its high, to close to 210. I think this is a must-have for a 50% upside. Aside from that, some of the IT names still look good, HCL Tech and Tech Mahindra. And my favorites, Piramal Pharma, Chemplast, Jubilant Ingrevia, and last but not least, Chambal Fertilizer. Chambal is not just a play on fertilizer and urea, but their shipping business is doing exceedingly well, which is one of their subsidiaries. So at 265, Chambal is a steal.
So loads of stocks that Sanjeev has doled out for our viewers because he believes that there is a lot of upside potential. I'm just curious to get in your take on the charts then, Kunal, maybe just, some of these names like an Ambuja or an ACC, what would be your take?
So from the cement pack, we've seen ACC and Ambuja getting into recovery post the sell-off which these stocks had shown in the month of January and February. Now, the short-term charts are still into a consolidation for both of these names. I think if I'm not wrong, ACC and Ambuja both are struggling to hold slightly below their 200 moving averages respectively. So I would expect that maybe these stocks are one leg up in terms of recovery from the Jan-Feb lows, but then they've yet to confirm a breakout on the short-term chart. So possibly if these stocks, say for example, Ambuja Cement crosses about that 450 mark, we can expect a double breakout, a swing breakout, which is the previous high breakout for Ambuja Cement, as well as the 200 moving average breakout. So the chart patterns are positive, but let's hope that these stocks provide the breakout also pretty soon.
Sanjeev, I'm quite curious about one of the stocks that you identified, Piramal Pharma, right? And this has been a rank underperformer, so to speak. I think it's lost about 23 odd % and still in the negative year to date as well. What makes you so gung-ho about the prospects of Piramal Pharma?
Well, Aisha, firstly, I suggested this about a month and a half back at 70 on your show. It hit 100. I'm up 50% on my portfolio. And I gave this game plan that the stock corrected from 200. The original business of the Piramals was actually pharma. They sold their blockbuster dust to Abbott, and then they got into real estate. On the API and on the contract farming, they're doing extremely well. The numbers are belying that. Let me also give you a disclosure. The Piramals have issued warrants at 127. So I think 127 is a minimum threshold which is coming. We'll wait for quarterly results, but pharma is coming back very, very strongly, and Piramal takes the cake. So don't underestimate the group, because I think the worst may be over when the demerger and the other over leverage was there. Now the numbers are showing you extreme strength. And as a disclosure, from 72 levels, we have a lot of position in that, both for our clients and personally. And I will not sell this stock till 150.
You also had recently that Nuvama note coming in on Piramal Pharma. They're pretty bullish on the stock, talking about a target price of close to 130, saying that they are expecting a strong product pipeline as well to drive growth down the line. Sanjeev, curious about your take on Reliance Industries. It clearly continues to remain a big talking point, particularly on the financial demerger, etc. What's your view on how the stock has been moving off late now that it's perched at about 2,800 levels?
Yeah, good morning. So, Avan, this is what the Bears' final nail in the coffin was, Reliance and HDFC Bank. They both don't give up. And how will you get the Nifty lower or the Bank Nifty? So hats off to Reliance. Just when it was seeming that we are into a correction, which we all were hoping for, Reliance comes out with this demerger. Now, it's anybody's guess what the real playout will be. But imagine the threshold of a financial service business like Reliance. You remember how they got into telecom in a big way, and the competition had to either move out or consolidate. And I think that is forthcoming now in their financial services business. By the way, these are all precursors to some of the large banks which have been underway on acquisition and so on, as the Bajaj Group has been. And I think that Reliance Financials will actually unfold, a lot of value creation which is there on the books. We know that their petchem and the oil and gas has reached a climax. It's only encashment of the investments. The retail business and the telecom is the new buzzword for them. So very, very innovative, and I would expect Reliance actually to lead the charge to 20,000 on the index.
Okay, brilliant at that. Sanjeev, also wanted to get your opinion on some of the auto names as well. The talk in the market seems that some of these stocks, or rather most of these stocks, are looking overvalued right now. Do you also believe, and amidst new launches almost happening on a weekly basis across the stable, two-wheelers and four-wheelers?
Well, you can't envy so much of a run, Aisha. Who thought that Tata Motors from 400 will be 600 like this? And my favorite, Ashok Leyland, is hit new highs. Ashok Leyland is headed for 200. As a disclosure, it's in my portfolio from 30 rupees, and I have no intention to sell it ever. Secondly, Maruti. Please add fresh money to Maruti and Hero Moto. They have just broken out along with Bajaj. Hero Moto, Maruti will lead the charge. And in the two-wheeler, you can add a TVS motor. But Ashok Leyland, Hero Moto, Maruti are three of my top picks.
We're getting lots more top recommendations from you, Sanjeev, but for a moment, let's just shift the focus to the editor's radar. And one of the stocks that you just flagged off, Tata Motors. Let's just talk a little bit more in detail about it. The SUV segment as well, getting quite competitive. And you've been talking about autos as well being in favor.
See, I've gone on record and I've said that Tata Motors will be stock of the year. So, with the underlying disclosure here that this is stock which in a sense we've been very bullish on as a channel, and there was logic when we turned bullish on it. But, sometimes you could ask yourself is that what is next? And that's the question you could ask yourself, what is next for Tata Motors now in the short to medium term? JLR is going to be coming out with good numbers. Cash flows would be positive. They are getting their operating leverage and the financial leverage benefit. But all that I think is something what markets know. Yeah. And because markets know all this number I think is 60% higher. Now you could ask yourself what's next. Now we always look at Tata with EVs and JLR, but there's another business which they have, which is the CVs. And this is where for the first time they're actually losing market share. But since I've talked about Ashok Leyland hitting an all-time high, why is Ashok Leyland hitting an all-time high? That is because Tata Motors is losing market share in the CV and the HCV market, which in a sense is a very high margin and a bread and a butter business, and a business which is in a cyclical uptrend. Second, the SUV market is getting competitive. Like it or not, everybody wants to buy an SUV, everybody wants to own an SUV, badi gaadi, choti gaadi, if you buy an SUV, that is important. But when you have 40 brands in the SUV market, when the new launches are happening in the SUV market, that means the pricing power with some of these SUV brands is going to go away. Sedan is losing market share, inventory losses will start there, but on an aggregate basis, SUV market also will get brutally competitive. So that's the question you would ask yourself, is that what is next for Tata Motors now? I mean, don't get trapped with momentum in Tata Motors. Ask yourself a question, why? A question which we were insisting everybody they should have asked, why not at the beginning of the year. Now you got to ask yourself, what's next?
So, but will CV do the trick for...
they're losing market share. I'm sure Tatas will figure out a strategy, but as of now, they're losing market share.
Okay, so that's important. Don't get caught up in the momentum when it comes to Tata Motors. Let's discuss another stack of stocks, and it's interesting because we're monitoring some of these names then largely on the back of the fact that these stocks are trading above even the highest target price recommendations, and these stocks have been very closely tracked by analysts, Nikunj.
Somewhere you got to ask yourself is that's how markets move. I mean, markets may always overshoot in the short term, and then the analyst recommendations they normally catch up, and that is what happens in a typical bull market. So while there is merit to say that okay, DVs and SEAT and even a Glenmark, the analyst targets have not been upgraded. But my limited point here is that this quarterly number will actually be very important for some of these group of stocks. ICICI Securities does not have relevance because of the merger now. Look at MRF. The difference between the current market price and the highest target is 20%. SEAT again 20%. So tire is one category where if numbers are not strong, you could see a sell-off because analyst targets versus current market price, if numbers are not strong, the stock is going to go down. Yeah. Similarly, DVs. The stock has run up and analysts have not caught up. If numbers are not strong, DVs again could come crash landing down. DVs, what is the halo stock? Came crash landing down, has given you a bounce back. Analysts have not upgraded. So if you're looking at this matrix here, tire stocks and DVs as a category, as a company.
Okay, there you have it. Those are the stocks on the editor's radar. Aisha, would be interesting as well to get in Sanjeev's take on these names.
Oh yeah, absolutely. Tire, Sanjeev, we've been talking about MRF hitting that 1 lakh mark, the entire tire pack surging along with autos. You think opportunity there still?
Well, like Nikunj pointed out, any disappointment in numbers or even meeting of expectation may see profit booking. But who's to complain? 180, Apollo Tire is 400 plus. MRF is above 1 lakh. Look at SEAT. So, look at Balkrishna Industries. So I can go on, because these are pedigree names. We own some of them as a disclosure. But like we said, Aisha, the best is that targets keep getting revised upwards. And the same people who were gaining for 15,000 on the index are now talking of 21,000. So markets change at a dime. It's the money flow and it will always chase the beauties. Yes, DV's lab is been a big outperformer and I think that will continue. In the pharma space, in contract farming, in API, it is doing extremely well and the numbers will be there. But like we said, there is little room for disappointment there is little room for upside because most of the numbers are pricing in. However, if you took a contrarian view, look what IT has done. For all the soothsayers and the FIs who were negative on IT with JP Morgan's biggest downgrade, sorry, as a disclosure, the index is up 21% from the day they downgraded. In the last 3 weeks, it's up 8.5%. I mean, Infosys, Tech Mahindra, LTIM have taken your breath away despite being lackluster numbers. So the sheer underweight ownership is going to drive growth. Titan will come out with this quarterly results, which will be equal to the last 3 quarters. Mind my saying, this stock will be 3,500 by Diwali.
Okay. The other stock that you talked about, Sanjeev, and I'm quite curious, ABFRL. Why ABFRL and not a trend? Because the typical migration or gravitation towards any of these retail names is towards trend. And, that's why I guess it commands that premium that it trades at.
Correct. But then you can't have the discount trading at ABFRL given the type of brands they have. Louis Philippe, Alan Solly, Van Heusen, Simon Carter, and now coming up with the American Eagle on the youth front, their Pantaloon acquisition. The Birlas are catering again. What is Mukesh Ambani's vision? It's of 100 crore people. That's why he thinks big. Same is the case with the Birlas. They're thinking of the public, the real public which buys these. We all go and own these stocks or shirts or pants, whatever, because the affordability factor plays out. And I think that recent acquisition saw downgrades, but over a period of time, that will be cash accretive. At 210, only you will make 50% gains in this stock rather than a trend. But like I said, the Tatas are the best group, I would say, arguably in the country, and no holds barred. Trent is again an outperformer, but my dark horse is ABFRL for a target of 300 by the end of the year.
Problem with the ABFRLs, Bhasin Saab, is that they're acquiring too much and they're spreading themselves too thin. You made an acquisition of TCNS, you wanted to reduce debt, that's why you got Flipkart, then you've done a share swap deal, you are getting Gallery Lafayette in India, you are trying to move into ethnic wear, you are acquiring small niche stakes in some of the designers. Are they losing their focus?
Well, yes and no. This is the type of consolidation you want. Birla's has always been a cement and a aluminium or whatever made. It's always an industrial house. Now they're furrow into financial services. By the way, AB Capital has more than doubled since when I recommended, and I think ABFRL is the next way forward. Look, Nikunj, this happens. Motherson Sumi went through a trying period in the last 1 year. I was very upbeat on this from 65 levels, but again, they acquired left, right, and center. Even there is, but the stock is up now 50% because people realize that if growth is back and spending patterns are picking up, then sooner rather than later, volumes and margins will come to reasonable terms. And even though, like you said, there is this big debate on the acquisition, the price is in my favor. Bhav Bhagwan che. जब भाव मेरे फेवर में है तो मुझे कोई दो राय नहीं.
Stock idea right now, which you would say that look, it's a fresh idea. I have not spoken about it anywhere, and it's the first time I'm speaking about it, at least on media.
Which one is that?
No, which is a new idea, a new gangbuster idea from Mr. Sanjeev Bhasin's table.
SW Solar.
ये तो बजट में बात करी थी इस पे तो ये तो 6 महीने पुराना है.
अरे अभी कुछ भी नहीं हुआ.
6 महीने पुराना है, जूना है.
जो शेयर 750 जाएगा निकुंज जी, वो 330 रुपए पे आपको मिल रहा है. आपको बता दूं, अगले साल एबिटा अगले साल नहीं, अगले 2 क्वार्टर में एबिटा पॉजिटिव और 12,000 से 15,000 crore की ऑर्डर बुक. So you can imagine this makes 12% flat margins. 350 is the running cost, and as yet there's nothing come from the parent as far as gigawatts. You can imagine what this stock holds. It just has an equity of 18 crore. ASW Solar is headed to 750. Buy it, hold it, and forget it.
All right, Mr. Bhasin, appreciate your time. So glad you could join us, and we should perhaps try and block your calendar much more. You just give us this new dynamism and high energy early in the morning.
Thank you, Nikunj. Thank you.
Nooresh, anything unique which you identified in the small or the mid-cap space as a trend which we've not discussed? I mean, we've discussed Reliance, Tata Motors, Delta, Indian Hotels. We've discussed all that. With Kunal, we've discussed Tata Motors and Tata Motors and Tata Motors. How about completely different this time?
So the trends which are shaping up are more on the stock specific side. One sector which comes up in terms of a bottoming out case is the textile space, which is more on the spinning side of it for now and could be much more further. So something like a Vardhaman Textiles has been basing out. You have, say, many more smaller names in this segment which are basing out. Arvind has started performing really well. So this is one sector which looks like the base is done. So Vardhaman Textiles, Ambika Cotton, one could take their choices. Nitin Spinners, they've gone through a correction of almost 30 to 50% and now sideways and taking a lead up. So this is a sector which looks interesting. There are many stocks even in the small cap, micro cap segment. So I would be watching out for textiles. I continue to like Vardhaman Textiles as the pick, which is more defensive in nature. But one could go ahead and look at Nitin Spinners also and even smaller names.
Chandan Tapadia joins us. Let's understand from him that if you are long in Reliance, what changes for you? Chandan, let's put things in context for us. Today, if you have a long position in Reliance, it's the last day and there is a compulsory unwinding. So if you're rolling over your Reliance long positions, or for that matter short position, what happens tomorrow? Because the price discovery after that, what happens to the underlying stock price?
Yeah, good morning, Nikunj. Thanks for having me. So this is a special case for the corporate actions. So Jio Financial will be spun out of Reliance and record date for the same is 20th July. So accordingly, all the F&O contract will expire today. So those who are holding the position in future and options, they need to understand that today is the expiry of their contracts. Now, what will happen? Those who are holding in cash market, they will have the one share of Jio Financial against the one share of Reliance as per the ratio of the demerger. So those who are holding in future, their position will be square up. There will be new contract from tomorrow. But those who are holding in cash, they need to understand that tomorrow there will be the new price discovery mechanism. So this is a special case in that scenario. Tomorrow there will be price discovery and the closing of today and price discovery of tomorrow. The difference will be constant price and part of the index as well. So for an example, today if Reliance closes at 2800 and all the contract will expire today, and tomorrow in the special session, if price closes near to 2700, so that means 100 rupees value will be there in index for the Jio Financial Services, and that value and constant value will be there a part of index. So there will be 51 shares in Nifty. Why this happened? Because otherwise there would have been impact on the index because of the decline in the price of the Reliance industry. Now this constant price will be there in the index, and once the new Jio Financial share listed, the date is as of now known. Once that is listed, then this constant price of Jio will be out from the index. So this is how going to happen if the corporate action per se in the Reliance and spin off of their Jio Financial business.
And then we just wanted that take from you, so thank you very much. Just something very specific we wanted your sense from. So Nooresh, Kunal, let's spend a minute understanding this, and we'll be slightly repetitive with this one. So Kunal, like you were discussing that there was an open interest of about 3 crore shares in 3.5 crore shares. 1.5 crore shares have been settled and another 2 crore shares would be settled today.
Correct.
Now, not everybody has an ability to take or move the position from F&O to cash. Not everybody has that ability because you'll have to pay upfront and there are delivery charges and there are brokerage charges. So if the F&O positions are going to be settled by compulsive buyers, and especially folks who bought Reliance in the last 10-15 days for a trade, not for an investment, that means 2 crore shares have to be settled today.
Yes.
That means pressure should come on the stock price.
No, in fact, it's the other way around, Nikunj, because what's actually happening is that, as I mentioned, that 3.43 crores was the open interest at the start of this July series. Yesterday till the end, the data was around 2 crore open interest, which means 1.43 crores of open interest has been already unwound. Now look at what the stock was at the end of July expiry. It was at 2660, 2665 odd levels. We are almost at 2800 levels, which means even after the reduction of open interest, the prices have moved up higher. When does that happen? When the open interest gets converted into delivery data. So in the last 10-15 days of this adjustment of the open interest for Reliance Industries, the delivery data is increased significantly higher. So what's actually happening is that the money is moving from F&O towards delivery. And today, most of all of these, the contracts for the current series, which is July, August, as well as September, all three of them will expire compulsorily today. So there is no option of rollover, for the F&O data for Reliance. Tomorrow morning, post the price discovery, there's going to be a fresh buying, which has to happen on the stock price as well as on the F&O.
Nooresh, let's hear your thoughts on the same point.
So I don't look at derivative data as closely, but technically the case for Reliance Industries is the fact that the stock has finally come back to 2800 to 2850 mark. If you look at the last 2 years, the first top was back in 2021 around 2750 odd levels. Then again in April of 2022, we were at 2856. Then again in June of 2022, it was around 2820 levels. And November, December, we made a top around 2755. So if you look at it, there are 4 tops around this area in the last 2 years, and most of it between 2021 and 2022. And we are back at that 2820 mark today. So this is actually a case wherein we could pause here, or we could just break out from here and surprise on the way up. The lower end of the range is 2200, which was tested a couple of times, 2200, 2300. So ideally, it's a 500, 600 pointer range. So whenever it breaks and sustains, we could actually be looking at a 500, 600 pointer on Reliance Industries itself in the next few months, whenever that happens. So for now, what we are seeing is possibly we take a pause around this area and then break out a few weeks later, or we can break out right away. So the view is positive. It's a buy at current levels as well as on dips. And we've seen historically, whenever such say actions have happened on Reliance Industries, it's been a game changer.
That's Reliance Industries for you, getting a sense as to how things are going to work out and what the view is on the charts. 28.35 is where it wrapped up yesterday. Let's move on then and check in quickly on the pre-open rates and what the top mid-cap ideas are from our chartists. So for now, 19,800 is the print on the Nifty. Do remember, it's been a steady handover from Wall Street as well as from Asia, and the Sensex is at about 66,780 levels. Nooresh, your top mid-cap idea?
So that would be a buy on Bharat Forge. The stock has been consolidating and slowly and steadily moving up, unlike the other names. It's been a slow and steady rally after making a breakout at 810, 820, in touching distance of the previous all-time high, which was a major resistance of 900. And the stock has done nothing from 2018, which is where it topped out at 750. In 2021, it's topped out at 800. Seems like a 5-year breakout in the making. I would expect it to cross 900 in the short term, make a new all-time high, and start a new trend. So expecting a short-term target price of 950, stop loss at 850.
Okay, Bharat Forge it is. Watch out for levels of about 950 on the upside. Kunal, your top mid-cap recommendation?
We'll go with Devyani International as a buy. The stock is forming a flag pattern on the daily charts. The breakout of this pattern is closer to 197.98, and the stock is just shy of that breakout, almost by 1% or so. So would suggest a buy with a target of 210 in the anticipation of a breakout, stop loss at 190.
Okay, thanks very much. Those are your top tech recommendations from the broader markets. Moving right on, here are some of the other headlines to track. And tech giant Microsoft shares rallied to an all-time high after the company announced its pricing for the new AI subscription service. The company is set to charge users an additional $30 per month for the use of generative AI tools such as Teams, Excel, and Word. Meantime, staying with tech, search engine Google will be starting a new pilot program where employees will be given internet-free desktop PCs. The move is amid the company's efforts to reduce the risk of cyber attacks. More than 2,500 employees have been selected for this program. And in recently released Henley Passport Index, Singapore has replaced Japan for having the world's most powerful passport. It allows Singapore free entry into 192 global destinations. Japan has been knocked off the top spot for the first time in the last 5 years. Meantime, back home, more than 24 Indian opposition parties have joined hands to form an alliance by the name India, which stands for Indian National Development Inclusive Alliance, for the upcoming general elections next year. The announcement has come in their Bengaluru meeting. And heavy rainfall has been witnessed in Surat and other parts of South Gujarat, throwing normal life out of gear. Many areas have been inundated due to the waterlogging, and commuters had a tough time reaching their destinations. Traffic jams, huge lines for vehicles, all of that has been seen at different junctions in the city. And meantime, MS Dhoni has sent fans into an absolute frenzy after the former Indian cricketer Venkatesh Prasad shared a glimpse of Dhoni's secret garage in Ranchi. He's housing an impressive collection of cars and bikes. This was a video that has been shot by MS Dhoni's wife, Sakshi, and captioned as one of the craziest passions I've seen in a person. What a collection and what a man MSD is. All right, top headlines, but let's find out the khabar on D Street. It's time for just that as we're 10 minutes ahead away from the market open. Let's find out about Bayer Crop. Now, that's in focus today as the parent company, we understand, is evaluating a crop science business spin-off. So it's going to be a complete restructuring. Let's understand what exactly this means and how the stock is going to be in the focus on the back of it. Sharad joins in with the details. Sharad, what's the khabar on Bayer Crop?
Well, yes, in focus we are having Bayer Crop, and the street is expecting that there might be a potential spin-off coming in for the crop protection business, and this is for the parent company. Now, last month itself there was a management change in the parent company of Bayer Crop, and the new CEO Bill Anderson had made his way, and also what we are hearing from the street is that the restructuring is expected to kick in, and this is actually being done to avoid the higher litigation costs. Apart from this, also there might be a separate listing for the crop protection business on the cards as well, and this is on the global level for the parent company. Now, what's the impact for the Indian business which is listed? Now, the street is estimating that there might be a lower focus on the Indian markets going ahead. Because of that, the product launches as well as the product flow might be impacted in the short to medium term. Apart from this, also the parent company has roughly 71% stake in the Indian arm, which is roughly 15,000 crores of market valuation. And recently the stock itself, if you look at it, the stock is still down 15% from its 2022 high levels. And also importantly, recently Aditya Birla Mutual Fund actually cut its stake by 2%.
Okay, there you have it. Crop science spin-off is what the company is planning. Watch out for that stock, but also keep an eye out on Tata Motors and the tire stocks there on the editor's radar. Just let's revisit that chat.
See, I've gone on record and I've said that Tata Motors will be stock of the year. So, with the underlying disclosure here that this is stock which in a sense we've been very bullish on as a channel, and there was logic when we turned bullish on it. But, sometimes you could ask yourself is that what is next? And that's the question you could ask yourself, what is next for Tata Motors now in the short to medium term? JLR is going to be coming out with good numbers. Cash flows would be positive. They are getting their operating leverage and the financial leverage benefit. But all that I think is something what markets know. Yeah. And because markets know all this number I think is 60% higher. Now you could ask yourself what's next. Now we always look at Tata with EVs and JLR, but there's another business which they have, which is the CVs. And this is where for the first time they're actually losing market share. But since I've talked about Ashok Leyland hitting an all-time high, why is Ashok Leyland hitting an all-time high? That is because Tata Motors is losing market share in the CV and the HCV market, which in a sense is a very high margin and a bread and butter business, and a business which is in a cyclical uptrend. Second, the SUV market is getting competitive. Like it or not, everybody wants to buy an SUV, everybody wants to own an SUV, badi gadi, choti gadi, we buy an SUV, that is important. But when you have 40 brands in the SUV market, when the new launches are happening in the SUV market, that means the pricing power with some of these SUV brands is going to go away. Sedan is losing market share, inventory losses will start there, but on an aggregate basis, SUV market also will get brutally competitive. So that's the question you got to ask yourself, is that what is next for Tata Motors now? I mean, don't get trapped with momentum in Tata Motors. Ask yourself a question, why? A question which we were insisting everybody they should have asked, why not at the beginning of the year. Now you got to ask yourself, what's next?
So, but will CV do the trick for...
they're losing market share. I'm sure Tatas will figure out a strategy, but as of now, they're losing market share.
Okay, so that's important. Don't get caught up in the momentum when it comes to Tata Motors. Let's discuss another stack of stocks, and it's interesting because we're monitoring some of these names then largely on the back of the fact that these stocks are trading above even the highest target price recommendations, and these stocks have been very closely tracked by analysts, Nikunj.
Somewhere you got to ask yourself is that's how markets move. I mean, markets may always overshoot in the short term, and then the analyst recommendations they normally catch up, and that is what happens in a typical bull market. So while there is merit to say that okay, DVs and SEAT and even a Glenmark, the analyst targets have not been upgraded. But my limited point here is that this quarterly number will actually be very important for some of these group of stocks. ICICI Securities does not have relevance because of the merger now. Look at MRF. The difference between the current market price and the highest target is 20%. SEAT again 20%. So tire is one category where if numbers are not strong, you could see a sell-off because analyst targets versus current market price, if numbers are not strong, the stock is going to go down. Yeah. Similarly, DVs. The stock has run up and analysts have not caught up. If numbers are not strong, DVs again could come crash landing down. DVs, what is the halo stock, came crash landing down, has given you a bounce back. Analysts have not upgraded. So if you're looking at this matrix here, tire stocks and DVs as a category, as a company.
Okay, a bunch of stocks on the editor's radar. Let's also talk about what the index calls are this morning as we slip into trade with the GIFT Nifty indicating a very quiet start. So it's a hold on the Nifty from Kunal, a no trade from Nooresh, Merani, and a hold from Bothra as well. So pretty much a consensus going in there, and the Moto meter indicating a hold for the Nifty. What about the Nifty Bank? What is it that our chartists recommend there? It's pretty much a similar call there as well. Kunal maintains a hold, so is the call coming in from Bothra, and Nooresh is saying don't trade the Nifty Bank. So consensus hold coming in for the Nifty Bank as well.
Nooresh, do you think by the end of this week, Reliance and Infosys numbers, Jio price discovery tomorrow, we would know that whether Nifty will go past 20,000 or whether it will retreat?
High chances by this weekend we get to know that, because there are a lot more other reactions also coming in. Globally also we've seen a breakout. So the viewers, if we can see some positive surprises from any of the heavyweights, it could surprise. Reliance is there. Reliance is 10%. You have HDFC Bank, which has been sluggish, and it keeps going to that 1700 mark and pulls back. Then you have ICICI Bank, which has made a new all-time high. Now that's like 30% of the index closer to it. And then you have IT results. So almost 40-50% of the index is critically placed in terms of whether they can make a blowout move or not. So I would expect clarity should come by Friday.
Right, okay, a minute and a half left to go before we wind up or rather begin trading. A couple of other stocks which are going to be in focus, and let's just revisit what IndusInd Bank is up to, what a Federal Bank pre-open rates are indicating, and then of course what is Reliance Industries as well up to, considering today is the last day to buy into Reliance Industries share if you want the Jio Financial Services share as a swap. Federal Bank holding up 1%. The one other stock that I want to look out for is also Rallis India, and Nikunj flagged this off earlier as well. Remember, Rekha Jhunjhunwala has now sold about almost 5% stake at 215 rupees per share. Tata Chemicals has been the buyer in Rallis. The stock is actually holding up by about 1% or so. So these are a bunch of stocks which are going to be in focus. And then, of course, there's Adani Transmission as well. The units sold has actually risen on a year-on-year basis. So just look out for that as well. L&T Technologies has been the only disappointing one, which is going to be seeing an earnings reaction. The dollar revenue growth has come in below estimates at about 9.8%, and the organic constant currency revenue growth has come in at about 0.6% on a sequential basis. So maybe we want to bring up that stock. But Nikunj, counting down, we're already at 19,800 on pre-open.
Reliance is the stock where, because of that technical adjustment, F&O last day, all three series put together, you will actually see this unwinding. You go to compulsory square of your long positions. If you have appetite, you will move it into the cash market, and that's, I think, was there. And that also explains that why you actually had a very large FI number yesterday in the cash market. All right, first rates nevertheless, 54 points higher for Nifty 50. It's a good start. And the push, I think, is not coming from banks for a change. The push is coming from a Infosys, from a Tech Mahindra. It is coming from a Wipro. So IT is, in a sense, pushing the markets higher. Where is Infosys? It shot up smartly, and it shot up very, very smartly in the last 1 hour of trade yesterday. It's off to another good start. Not too many newsmakers this morning, but you go to look at IndusInd Bank post numbers and Federal Bank post the fund infusion announcement. And IndusInd Bank, when markets start believing that you will continue to deliver on a sustainable basis, the re-rating starts. 50 rupees higher for IndusInd Bank, and Federal Bank raising capital, price to book goes higher. They'll have to deliver a much more before markets get confident. So Federal Bank markets are saying, okay, good news. IndusInd Bank markets are saying, let's give it a double thumbs up that for the third or the fourth quarter now, they've delivered. But the breadth, unlike yesterday, I think is looking meaningfully better.
Yeah, meaningfully better. IndusInd Bank really doing the magic, and brokerage reactions also have been pretty positive. So Morgan Stanley maintains their overweight stance. They've hiked the target price to now 1800 from the earlier 1725, clearly indicating further upside and headroom to IndusInd Bank from the current market price. 3.25% higher. IndusInd is clearly your big star performer this morning. Also, Titagarh, I want to check in on what that stock is up to. HSBC has initiated coverage on the stock with a 35% upside from the current level. So the target price of 730, 554 is where that stock is. It's a 2.6% uptick that you're seeing on that stock. And then NTPC as well, wherein Goldman Sachs has initiated a buy, target price 265, saying that this is going to be emerging as a winner in the transition. NTPC is the other stock that I'm talking about. Will just come off you on your screens. For LTTS, of course, it's been a muted first quarter. Tata Power has initiated, Goldman Sachs has initiated a sell on Tata Power, target price 190. Tata Power is currently in the red as we speak right now. A couple of other stocks in ICICI Lombard also came out with their numbers. Their gross premium has risen about 19% on a year-on-year basis. A very muted reaction is what you're seeing on that stock. Amara Raja, look out for this because Clarius ARBL has sold their entire stake via a block yesterday. That stock is holding up by about 1%. And then Rallis India, in which Rekha Jhunjhunwala has brought down her stake considerably, is the other stock that I want to revisit. 0.5% higher for Rallis as we speak right now. There's of course Adani Transmission as well. The units sold in the first quarter has risen 7.6% on a year-on-year basis. So that's the other stock which is in focus.
You know, it's Tatas who bought from Rakesh Jinwala. So it's an interesting transaction. Rarely do you see that Ultra HNI has sold and a promoter, in this case Tata Chemicals, backed by Tata Sons, has actually bought into it. So for me, it is this entire nature of the transaction. I mean, HNI investors always sell, funds always buy and sell, but it's the promoter in this case which has bought into Rallis, and their stake now in Rallis is about 50%, so it was not that it's below 30-35% that the Tata Group had to increase their stake, but that's the view. A couple of years ago, they increased stake in a lot of other Tata companies, and we thought why, and look at Tata Motors, Tata Steel, where the TCS cash was used by Tata Sons to increase the stake. So interesting. All right.